Retail sales, November is out at 8:30 a.m. Eastern, expected to show an uptick from the prior month, indicating that consumer spending is still pretty solid. For more on retail and some picks, let's bring in Simeon Siegel, senior analyst specializing in retail and e-commerce at BMO Capital Markets. Good morning.
Good to see you.
Macro concerns, yet in your universe, 65% of companies grew sales and had improved margins.
Isn't that great? I think we think about, and to be fair, there are macro concerns. I don't want to belittle that. We know inflation. We know all the conversations. But for better or for worse, the U.S. consumer is overly resilient. And so what we're seeing now, as opposed to what we saw in COVID when every company was growing, now we're seeing winners grow and laggards not. And that's how it's supposed to be.
So in terms of macro, from that, you can say that the consumer is still strong, although there are winners and losers and divergences within retail. But the overall message is consumers still have a lot to spend?
Well, so I think it's an interesting juxtaposition. Consumers are still spending. Whether consumers are still strong, that's a different conversation. And I think that is something about what we see. For better and for worse, people are very scared about not having something under the tree. And so I think in a normalized environment, you should have companies that are taking share from others and companies that are giving it. In COVID, with stimulus, everyone benefited.
So for the actual stock prices, you think people are paying up for the good ones and the bad ones, people are actually not even buying them?
Yeah, I think that the appetite for a turnaround right now, the appetite to take risk is very low. And so what's interesting is the way we're segmenting, the way we're thinking about it is right now, you can either choose to take risk on the business, on how the company is going to do, or you can choose to take risk on the multiple, what it's going to be worth. When we're looking at businesses like TJX, there are companies like Walmart, Costco, like the scarcity of quality companies in consumer means people are paying up for them. Whereas you look at other businesses that have turnaround status that people are worried about, and you effectively have expensive for a reason and inexpensive for a reason. I think you can find winners in both, though.
Nike's a turnaround that you like, though.
I do.
So that's different than what you just said.
So I like turnarounds. So we're talking about the market. I have to acknowledge that my job is to find the TJXs that are going to compound and be willing to spend up when the market is telling me to spend up. But I also should hopefully, right, if I want to earn my paycheck, should also find some things that people aren't looking at. We've been talking about Under Armour. Under Armour is a great example of, if the three of us talked about Under Armour as a brand, we'd probably think, and people have said, it's a dead brand.
You need to explain Nike to me, though. What are they doing right?
Oh, but hold on. I want to go back to Under Armour. You think Under Armour is going to work?
I do.
You do?
I do.
But why now?
So, and it has been. So if we think about the now, so the last time you and I spoke, this was a company that had the same negative perception.
Right.
People call it dead. We may or may not want to be wearing the product, and yet, $6 billion worth of revenue. There are people buying it. And so that's what I love. There's certain companies where really large businesses with large revenues and no profits.
Right.
In my world, not in tech, not in bio. This isn't some capital-intensive business. It's shirts, shoes, it's cloth. If you're selling a lot and not making money, sell less, charge more, you'll make more money. And so Under Armour is going to do that. Doesn't mean that
they haven't done it yet, though.
So they haven't. The stock, though, has been working. So they've been starting. So we're now 2 quarters in, revenue's down double digits.
Yep.
Gross margins up over 100. Kevin Plank has adopted a different tone.
Okay.
And we're seeing this. He's calling it achieve more by doing less. I think we're on the path.
Okay. Nike reports Thursday.
Yeah. So Nike's a similar conversation here in that they're not perceived to be dead, but they're perceived to have trouble. We know Hoka on. We're seeing people take share. The interesting thing about it is up until the last 2 quarters as well, actually, they've still been generating more dollars. They've still been selling a lot of product. And so what they need to do is they need to do what Under Armour is doing and pull that back. And so our checks through November showed them pulling back a lot of product. So they had to clear through that product that they have now, that was all the Jordans and the Air Force Ones that we've been seeing, all those dunks. They need to work their way through that, and then they can start rebuilding. Starting December, so for the last few weeks, we've actually been seeing a pullback in promotions. And so that could be, it's early, we'll find out in 2 days, but it could be the beginning of Elliott's plan to re-elevate and return Nike to where they were.